Hey, this is Sasha. Thanks for joining me here for another episode. Today, what I want to do is do a technical analysis evaluation for you on Activision Blizzard. So ATVI, we're going to take a look at that stock chart and also share with you some ideas and ways to kind of play the stock when it comes to options as well. All right, so before we get started, I think it's important to disclose that I am pre-filming this video a couple weeks in advance. So as you look at the chart, it may have shifted and changed. But when you start looking at this chart, you'll notice that, hey, if we're looking at a weekly or a monthly chart, the amount of movement isn't going to be too bad. So I plan to release this video on about December 24th, just because it's the holidays. I'm not going to be around that time, but I thought I'll do a quick little stock evaluation for you. And that's only a few weeks out. So if you look at the stock chart recently, what's been going on and happening is we've just been moving kind of a little bit sideways. And as we continue doing these evaluations here, and I continue to go through, just keep in mind, if you're serious and you want to learn more about technical analysis, trading, check out our website at tradersfly.com. You can also check out the membership. And this is where we talk a lot more about our swing charts right here. And then we're going to have an options membership here soon as well. So check out these memberships if you're serious and you want to learn more and you want more market recaps where they're posted. And right when they're posted, you get a much bigger insight right away rather than, me pre-filming these videos. But you'll get an idea here and taste of what it's all about. So in either case, let's kind of back up with this stock and let's just look at a big picture view here real quick first. What you'll notice is the stock did fairly well, from 2013, 2014. It's been continuing and ramping up very well. We just had this recent pullback, and now again, it's trying to kind of move further upward. So as we look at kind of these charts, let's go take a look at the weekly. You've had a few recent swing points. So here's a couple of recent swing points, and then that stock continued to kind of ramp up and move into this way and kind of this channel. So notice how, this angle was moving, and you can see there's an internal a couple of trend lines right here, and then this as well. It continues to kind of move within this channel. So ultimately, we've been heading to the upside within this channel. There's some resistance right here. So as you check this out, there's resistance. Here is your support, and you've got resistance over here. The stock attempted to do a quick little breakout in this level. So you can see, hey, here's a little breakout right there. Now, once we got to those peaks in 2018, that stock sold off in a big way. So this was your kind of breakdown stock, and it was breaking down. And after we broke down quite a bit, which was right around $85, and we dropped down to about 40, the stock started to base and kind of create this rounding bottom. So here's our base. This is a key support level, and this stock now ultimately was moving sideways, and then we tried to bounce again. And let's zoom in into this area next. So as we continue and start looking and evaluating this zone, what I want you to watch and pay close attention to is that, hey, here's kind of our main support zone. So here's our support. You also have some significant kind of resistance over here. Here we tried to do a small little breakout, and now we also have a little bit of support here. So internally, that resistance became support, and this is also resistance. So over the next few weeks, probably by the time this video is posted, are we still going to be in this range or area? Time will tell. The volume right now, we have some bearish volume that's picking up right here, but you do have a few little insights to a few little bullish bars as well. So it's kind of just flatline. It is creating this rounding bottom right here that's being created. What I would watch is to see if, hey, can we break out above this and go there with more volume, or are we going to roll back over and get back into kind of this support range or this consolidation area again? So that's really the big picture with the stock. As you're looking to kind of take some profits into strength, I would watch some of these upper resistance levels. So you're going to get some resistance over here. So definitely take some profits into strength in that level and area. And of course, as you get into that range around 80 to 82, you're also going to have some heavy resistance. Now, yes, these are a little bit of outliers. That is confluence way over here. But remember, support and resistance, they're not just one single line. They can actually be a little bit more of a little bit of a rectangle. And that's really what you're looking at here. So that's what I would look at as far as the stock. Now, the question is are you bullish, bearish, long-term investor on it? Where does it fit in your portfolio? That's a matter of a personal opinion. How long are you going to hold it for? So really, you need to do your own due diligence on that. Once you know where it fits into your portfolio, then of course you can make a trading decision. So I'll share with you, besides just the swing charts and the technical analysis here that, you could go ahead and manage your money accordingly. Besides just that, let's take a look at a couple of ideas when it comes to options. So depending on what you're looking to do, here is a bullish version diagonal for this trade. And in this situation, I am selling the January 17th 55 calls and buying the February one 52.5 for protection. This allows me to go ahead and, as far as risk goes, I'm putting on about, well, you can see $2.41, so $241 of risk, and it's basically like selling a covered call. It's a variation of that strategy, doing covered rights, having the stock and selling it. And it allows you to make about 10%. So in this case, I'm looking $27. So of course, if you ramp this up to, let's say, 10 contracts, you're going to go ahead and risk about $2,400 to potentially make about $270, $280. If that stock pops just a couple dollars. And if it stands still, you could still make about $600 at expiration. That's just the profit curve. You could also play this a little bit differently. Let's again bump it up to 10 contracts with kind of a calendar. The big downside with this, even though this is a little bit of a bullish calendar, in this case, I am trading the 55 call calendars. Again, January 17th, February 21st. Again, if you're watching this video a little bit further out, you could go to a February and a May kind of time frame. So you could be out further in time. It's just that the calendar is positioned a little more bullish. And in this case, what you're trying to do is allow that time decay to kind of work, but you're not expecting a huge move. So what could happen is, if you want to position this more like at, let's say, here, let's see, if we have a 57, there we go, 57 and a half and 57 and a half, I could do it this way. And that gives me a little bit of a bullish skew on that calendar because I am positioned, current price is about 54. It gives me some room. If you have a calendar that's too centered and in a bullish environment, it could just blow past that and volatility could work against you. If you're looking at another diagonal, of course, you could go ahead and do something around, or just instead of the 55s, 57 and a half, so you could do the 55s, again, just depending on how bullish you want to be and how far out in time. Here's a bearish example. If you're a little bit more bearish, you could do the same thing, just going down. So in this case, I went ahead and I got the January 17th selling 10 of the 52.5 puts, and I'm buying the 55s February 21st puts. Again, if you're watching this a little later in time, it could be 1 or 2 months later. Then you just go out further out in time. It would be the further out month strike prices. And the other way, if you just want to do it with a single calendar, you could do the same thing, position it at 52.5 on the put side. And now what's happening is the current price is right here, right? And if the stock goes down here, I also make about $1.90 every single day that stock stands still. So, but I also have a break even at about $50 there. Again, you could go ahead and shift this to, let's say, the $50 level. And then I could also move this to May and this one to February. And now I have a calendar that kind of looks a little bit more like this. Okay, so again, still a bearish calendar to the downside. So just a couple simple trade ideas for you. The only downside with doing some bearish calendars like this and just shifting it is that volatility will work against you as this stock heads higher because you are positive Vega. So just understand that concept. For some of you, you may want to go ahead and do some butterfly trades in that case. But in this case, I just wanted to stick with just calendars or diagonals just to show you the example. Anyways, I hope this was helpful, gave you some insights. Definitely check out our membership area. You could check out the swing charts, which is the technical analysis version of what we just did here. And you could just check out the pictures where we take the pictures of the videos and you can get some insights within the screenshot. So you could just look and study the photos and look and study the actual charts themselves without the video. And if you're interested in option strategies, we'll be launching that membership soon as well. Anyways, thank you so much for joining me. Hope you enjoyed this video, gave you some thoughts and ideas about looking at technical analysis. You can see it doesn't have to be that complicated. You could keep it simple. It comes down to understanding where that trade fits into your portfolio. All right, thank you so much for joining me, and I'll see you next time.